More banks are collapsing, and in this video, I'm going to explain why that is good news for home buyers who've been waiting on the sidelines. So let's get into it. Hey, for those of you that don't know me, my name is Rick Harrison, and I'm a home buying specialist here in Southwest Florida. And on this channel, I bring you the latest tips, tools, and tours to help you decide if this is the right time and place to make your move to paradise. If that thought's crossed your mind, you're in the right place. So subscribe and tap the bell to stay up to date on the latest information, keeping you ahead of the curve. So as I mentioned in my last video, last Thursday, we already know that there's been several banks that have been collapsing over the last couple of weeks and months, but several more have fallen since then. The Fed actually just came out yesterday and raised it another 25 basis points, but they also came out and said that everything was fine, the economy's fine, everything looks good. Now we have news today that several more banks, regional banks, and now starting to trickle into the big banks. But First Horizon shares crash after TD Bank deal terminated. Obviously, if First Horizon was looking for a deal for another bank to buy them out, that's telling you that they're in financial trouble. I mean, no bank is going to sell to somebody just because they want to get out of the business. After that news came out, First Horizon Corp shares plunged 37% at the open today, which is the most significant decline since 2008. As you can take a look at this chart here. You can see that there's a pretty large sell-off over the last couple days, and that's just continued. If that wasn't enough, it's now starting to spread to the bigger banks. PacWest, US Bank Corp tumble. So Western Alliance Bank Corporation is considering a potential sale of all or parts of its business. That was reported by the Financial Times, and then all of a sudden Western Alliance came out and said that that was completely false in all respects. So while the stock did bounce, rising up to $18, the bank run is now in full swing, according to this article. And then there was an update at 10:30 a.m. after this came out this morning. PacWest shares halted after extending route to 52%. KBW Bank Index down as much as 5.5%, the lowest since September 2020. And then S&P falls 1% to lowest intraday since March 30th. Western Alliance resumed. They extended the slump to 45%, and then it halted again. So you can see a lot of people are exiting that stock in particular. On top of that, PacWest Bank Corp confirmed that it was indeed in talks with several potential investors and said core deposits have increased since March in a desperate attempt to calm markets. So here we go. Here's a chart for PacWest. Made a little bit of a comeback, but it's still falling. And then you also have, here you go, Western Alliance Bank. USB here, US Bank Corp. Here's their stock. It's down as much as 8%. Gives you an idea where the banking crisis is at. And I have a feeling that we're kind of just in the beginning innings. I think we're going to see a lot more. The debt is way higher than it was back in 2008. And everybody said that this was not going to happen because the banks were strong and all the mortgages are great and there's no subprime lending like it used to be. But there's other issues in the economy. Like I've been saying for over a year now, we've really just been kicking the can down the road. We're not solving the actual issues, the underlying issues that are causing all these problems with the economy, with banks, with lending and debt, really. This article comes from Bloomberg. Toronto housing market roars back with sales. And I'm going to go into why all of these things are related and how that's going to affect home buyers who've been sitting on the sideline, because there's two sides of this going on right now. First, the banking crisis. With the banks falling, the stock market itself is falling because people are getting worried. Now they're really starting to have fears of a recession. And when that happens, people pull their money out of things. They pull them out of stocks. And when that happens, stocks plunge. When stocks plunge, people look at their portfolios. They see that they're not as wealthy, or they may not be able to live on it as long as they thought they were going to. Then they really start to save, and that contracts even more. So it's really a trickle effect and a little bit of a spiral, and that will trigger home prices to come down. Now, the other side of this is that while the economy, the stocks, and the banking crisis are going one way, the housing market, we still have a lot of low inventory. Now, whether all that stuff that's going on with the banking crisis, if that starts to affect a lot more layoffs, and that leads to more foreclosures and more short sales and things like that, that could bring a lot of inventory to the market. However, as of right now in Florida, housing is staying pretty steady. And in Toronto, they're actually seeing a surge. They had a huge dip though over the last 6 to 12 months because of the rates. However, the rate pause brought buyers back out in force. And that's what we're looking at right now in the US, because we just had a 25 basis point hike from the Fed, but they're already talking about pausing after this because everything's breaking right now. So if that does happen and they do pause, everybody right now, because they're afraid of what's going on in the stock market and the banking crisis, they're starting to pour into the bond market because their money's guaranteed there at 4% or 5% or whatever it is. Why would you take a 0.01% in a bank that could fail instead of going and moving your money over to something that produces 5% guaranteed by the federal government? That brings yields down. 10 and 2-year bonds really indicate where the mortgage rates are going. So if everybody's swooping into the bond market, that drives the yields down, which drives mortgage interest rates down. If that happens, we're going to see more buyers probably enter into the market. And really, until the inventory starts to pick up again, that could start to drive prices back up again, which is what's happening in Canada right now, in Toronto, according to this article. All right, let's get right into this week's market data, because there are some big changes and we are starting to see a little bit of a shift. It's not something like Toronto yet, but we are starting to see a shift of buyers again entering the market. So let's take a look at the interest rates right now. Last week we were at 6.49%. This week we're down to 6.27%, which is one of the lowest interest rates we've seen in quite a while. Bank rate had us actually going down too, just 10 basis points, but still in the right direction. Cape Coral and Naples, last week 878 new listings, this week 912, so that's a good thing, but it's really only 3%, which is not a lot, and you're going to see that that actually did not change that much for the inventory breakdown. Solds went from 789 way up to 1068, that's up 35%, and then pendings, which is what's going on in the market right now this week, 1065 last week to 1007 this week. That's actually down 6%. So you can see there has been a little bit of a letting off the gas for buyers entering the market. And then, of course, price decreases you see here went from 1029 to 1062. So that's up 3% as well. So let's look at the latest inventory breakdown. Single family homes, we went from 5918 last week to 5847 this week. We lost 71 units over the last 7 days. Condos were down 9. So we had a net gain of 24, which we were starting to see stagnation there. Now we have a loss of 80 units. So we're starting to lose inventory again. Multifamilies, 101 to 100, down 1, not much of a change. Same thing with foreclosures, down 3. Total sales. So this is a big change. Total sales went over the last 7 days, 903. That's up 45% from last week. So that's a huge gain of the number of people who have actually closed on their homes. Out of that, 494 were cash sales, and that's actually down 2%. From 56% last week, it's down to 54%. Over the last 7 days, more financing buyers have entered the market. All right, so this is the chart of just the weekly trends. As you can see, we lost quite a bit going into really November of last year. And then we started to gain some. Again, we lost some towards the beginning of the year. That's usually that seasonal, the holidays. But then we started to increase in the number of new listings. We had a pretty large increase right in the middle of January. And then ever since, we've really seen a decline over the last 2 months, really. So you can see that new listings are declining. That's what that red arrow is. And then when you compare that to pending sales, which is the number of buyers who are buying, you can see that they're inversely related. Since the beginning of January, we've had a consistent increase in pending sales. So more and more people are starting to buy, but we have inventory, which is starting to decline. So when those two things happen, that drives prices up, which is what is really, I think, keeping the home prices in our area buoyant. They're really still rising at about a 1 or 2% clip. Interest rates. And this is how it all relates. The number of new listings decreased, and at the same time, the number of pendings or people making offers on homes increased. So those two are inversely related. And most of that goes back to what's going on in the bond market, the 10-year bond market. As you can see, since January, the bond market has been declining. And with that, lower interest rates, it means lower interest rates, so more buyers can enter back in. And we're starting to see that that's actually declining more. And I think with this 25 basis point hike and everything that's going on with the banking, everybody's moving into the bond market, decreasing yields. I think we're going to see those interest rates fall even further. But time will tell. I mean, who knows? This market has been all over the place lately. All right, PUNTA GORDA Sarasota. New listings went from 717 to 654. It's down 9%. Solds went from 716 to 954. That's actually up 33%. And then the new pendings over the last 7 days are down 11%. So less buyers entering the market in the northern part of Southwest Florida. Inventory breakdown for the northern part. We had single families actually lost 81 units here, down to 5488. Condos lost an additional 8. So same thing with the southern part. We had a net gain of 50 last week. We had a net loss of 89. So that's a 130 unit swing from last week to this week. Multifamily and foreclosures had no changes over the last 7 days, and then same thing with total sales. As always, we've got a lot to keep an eye on, but not to worry, that's exactly what I do on this channel every week, so don't forget to subscribe. And if you have questions, let me know in the comments, or you can call, text, or email me anytime. I'm happy to help in any way I can, and all of my contact information is in the link in the description. Thanks again for watching. I hope to see you on the next video, but until then, stay safe, stay positive, and may the 4th be with you.